Welcome to the Talk Taxes to Me workshop. In this workshop, we will go over the basics of taxes to help you feel more confident during this tax season. Before we begin, I do want to start off by reading this disclaimer. We are not tax experts. We cannot give tax advice, and the information presented to you is from the 2025 IRS Publication 17, 2025 IRS Publication 501, 2025 IRS Publication 519, and the California Franchise Tax Board 2025 542EZ Personal Income Tax Booklet, and has been condensed for educational purposes only. For specific help, please speak with a tax expert or visit the IRS official website at www.irs.gov and the California Franchise Tax Board at www.ftb.ca.gov. Today's agenda has different sections that we'll go over. So we will first start off by asking ourselves why it is that we pay taxes. We'll then switch gears to talk about how your first job impacts the taxes that you pay. We'll then switch to who must file. We'll then go over understanding filing statuses. If you do decide to file during this tax season, we'll go over common documents that are needed. We'll then talk about the many different ways in which you can file. We'll then switch gears to talk about the relationship between financial aid and taxes, briefly talk about protecting yourself from fraud, and end it with some key takeaways. First, we'll start off by reviewing some common terms. Tax collection agency is an entity that collects taxes and enforces tax laws. And there are two types that we'll talk about today. The first one is the Internal Revenue Services, or IRS, which oversees the federal income taxes. And the second one is the California Franchise Tax Board, which oversees the California state income taxes. When we speak of an income tax return, these are tax forms that you complete to report income and other tax information to the IRS or with the state or local tax collection agency. So in California, we are one of the states that does require folks who earn income in California to also file a state tax return. So again, that would be through the California Franchise Tax Board. Taxable income is the portion of your income that is subject to being taxed. Adjusted gross income, or AGI, is the total income you make over the course of 1 year minus any certain adjustments. The IRS uses this to determine your tax liability. Tax liability is the money you owe to the IRS. Tax deductions reduces the amount of your income that can be taxed, and there are two types. The first one is the standard deduction, which is the flat amount that you can subtract from your AGI to reduce how much of your income gets taxed. And this is based on your filing status. The second type is itemized deduction, and these are expenses you can claim to lower your tax liability. Examples include medical or charitable contributions. Tax credits reduces the amount of tax you owe, dollar for dollar reduction of your tax liability. And the last term we'll talk about is a tax year, which is a 12-month calendar year covered by a tax year. So for the 2025 tax year, we're looking from January 1st through December 31st. All right, so let's briefly talk about why we pay taxes. This in itself can be its own course, but for the purpose of this workshop, we will simplify it to one slide. In a nutshell, taxes are required payments of money to governments that are used to provide public goods and services to benefit the community as a whole. These examples can include building highways, parks, schools, programs such as Social Security. So that's in a nutshell why people pay taxes. Now we'll discuss how your first job can impact how much taxes you pay. It all begins with a W-4 form, which is also known as the Employees Withholding Certificate. And this form is an IRS tax document that employees fill out when they begin a new job. It tells the employer how much to withhold from an employee's paycheck for taxes, and how this form is filled out can significantly affect whether someone receives a refund or owes taxes when they file their tax return. So on the right-hand side, we have the form itself. As you can see, there are different sections, and I do want to just add that it's important to check it at least annually or when there is a life-changing event, such as a divorce, marriage, new dependents, or side gigs that can trigger a change in tax liability. In this section, we will now talk about who must file a tax return. So who must file a federal tax return depends on your filing status, your age, and how much gross income you made. So for example, the majority of you are young college students, so let's assume you're filing as single, you're under 65. If you made over 15,750, then according to this chart, you will be required to file a federal tax return. If you made less than that, then you are not required to do so. But if you are unsure on whether you need to file, we highly recommend that you use the Interactive Tax Assistant tool on the IRS website. This is a really great tool that can help you determine whether you need to file a tax return, your filing status, what credits and deductions you are eligible for, and if you can claim a dependent. If you do file a federal tax return, it will be the Form 1040 or the U.S. Individual Tax Return. This form, you'll be able to find out what your tax liability is. So on the right-hand side, you can see how the 2025 tax return looks like. Keep in mind that if you've overpaid, you get a refund. So essentially, the government is returning excess money to you without interest. And depending on whether you like getting these huge or, in general, refunds, going back to what I had said earlier about the W-4 form, it might be a sign that you have to adjust your withholding so that you can keep more of your money during the year. On the flip side, if you've underpaid, then you have to pay the IRS. This does not mean that you messed up. Usually there are payment plan options that you can look into. The other thing as well is to update your withholding. So again, I encourage you to speak to a tax expert. And another option is if you know that you owe the IRS is to consider opening a separate savings for a future tax bill. Like I said at the beginning, the tax year that we're looking at is from January 1st, 2025 through December 31st, 2025. And the deadline to file is April 15, 2026. Now let's briefly talk about who must file a California state tax return. Generally speaking, you must file an income tax return if you're a resident, part-year resident, or non-resident and are required to file a federal return, receive income from a source in California, or have income above a certain amount. So as you can see, this chart right here, it's a little bit differently than what we saw from the federal, but again, it has the same types of filing statuses. So again, let's say you're filing as single, you're under 65, and for the purpose of this example, you have 0 dependents that you're going to claim. If you made over 22,941, then typically you would be required to file a state tax return. On this slide right here, we have screenshots of the 2 different types of state tax return forms that you might file. The one on the left is the 542EZ, and the one on the right is the Form 540. They're very similar. The biggest difference is that they differ in complexity and eligibility requirements. So the Form 542EZ is a simplified, shorter form for straightforward tax situations, while the Form 540 is the standard, more comprehensive form. You can use the 542EZ if your finances are straightforward and you want a faster filing process, and you can use the 540 if you have complicated, varied income sources or need to itemize deductions. So we'll briefly talk about taxpayers with ITIN. ITIN stands for Individual Taxpayer Identification Number, and this is issued by the IRS. This is issued to individuals who are not eligible to obtain a Social Security number, They're issued regardless of immigration status. In order to apply for an I-10, there are three different options, and the right-hand side, you'll see how the form looks like for the application. So the first option is to mail in your W-7 form, tax return, proof of identity, and foreign status documents to the IRS. The second option is to apply for an I-10 in person using the services of an IRS authorized certifying acceptance agent. This will prevent you from having to mail your proof of identity and foreign status documents. Or option three is to make an appointment at a designated IRS Taxpayer Assistance Center. This will also prevent you from having to mail your proof of identity and foreign status document. All right, so we've been talking about who must file a tax return. Now let's talk about who should file a tax return. This would be for folks who had federal and or state income and their tax was withheld. Sometimes you might be eligible for a refund. You never know, so that's one thing to consider. And number two is to see if you're eligible for certain federal and state tax credits. I won't go over all of the credits that are available, but I will use an example. So one I have on here is a tax credit for former foster youth. So if you identify as such, there's one called the Foster Youth Tax Credit, or FYTC. And as you can see, you have to meet certain criteria in order to be eligible for this tax credit. But again, there are other types of tax credits out there that you might be eligible for. If you're still not sure whether you need to file or should file, again, I encourage you to use the Interactive Tax Assistant tool on the IRS website or visit ftb.ca.gov. Now let's talk about understanding the filing statuses. So right here I have the federal tax return, and as you can see where the box is highlighted, this is where you will check mark how you will file your taxes. So there are 5 different types of filing statuses. The first one is single. It's for people who aren't married or who are divorced or legally separated. The second one is married filing jointly. This is for married people who want to file one return. The third one is married filing separately. This is for married people who want to file 2 separate returns. The fourth one is the head of household. This is for unmarried people who maintain a household with at least one qualifying person. And the last one is the qualifying widow. This is for people whose spouse died in the previous 2 years and who have a qualifying child. We'll then move on to talk about dependents. And so here in the red box, you'll see that information where you will add it if you are claiming someone as a dependent on your tax return. Dependents, who are they for tax purposes? The IRS defines a dependent as either a qualifying child or qualifying relative that the taxpayer can claim on their taxes for certain deductions or credits. So keep in mind that the definition that the IRS has is a completely different definition that financial aid has when we talk about dependents. So dependents, when it comes to the IRS, they must have lived with you, except for parents or students away to college. Exceptions exist for children of divorce. A dependent must have depended on you, so you must have paid more than half of their upkeep, and you must have paid more than half the cost of keeping up your home. Dependents must be a U.S. citizen, U.S. resident, U.S. national, or resident of Mexico or Canada, and dependents cannot file a tax return where they claim themselves. So to go a little bit over more on, what qualifies someone as a dependent for tax purposes, there are 2 different types of tests. So the first example we'll talk about is qualifying child. So to be considered as a qualifying child, you must meet 5 tests. The first one is the relationship test. So the child must be either your child, a stepchild, foster child. The second test is the age test. So your child must be younger than you and younger than 19 at the end of the year. If your child is in college, they can still be considered as qualifying until the age of 24. And if your child is permanently disabled, they qualify regardless of their age. The next test is the residency test. to meet this test, your child must have lived with you for more than half the year, and some situations may qualify as exemptions or reasons why your child didn't live with you that will still allow you to claim them. And then the next one is a support test. So your child didn't provide more than half of their own support for the year. And the last test that we look at is the joint return. So if your qualifying child is married, they can't have filed a joint return with their spouse unless it was to claim a refund of income tax withheld or estimated tax they paid. So that's for the first test, the test to be a qualifying child. Now we're going to look at tests to be a qualifying relative. So let's say you don't have a child to qualify as your dependent, but maybe you have a family member who lived with you more than half the year. So a qualifying relative can be any age and can be considered as a dependent who helps you qualify for the head of household filing status by meeting 4 tests. You're not a qualifying child test. The relative isn't your qualifying child or the qualifying child of another taxpayer. So for example, you have an adult child who doesn't meet the age test to be a qualifying child, but they may meet the other test to be considered a qualifying relative. The next one is the gross income test. So your qualifying relative can't have gross income of a certain amount for the tax year. Income includes money, property, and services that aren't exempt from tax. There are exceptions, and this limit may change from year to year. And the next one is the member of household or relationship test. So anyone who lives with you all year as a member of your household can meet this test even if they're not related to you. If the person is your child, stepchild, or foster child, they may also meet this test even if they didn't live with you all year. Same goes for other relatives, grandchildren, siblings, half-siblings, parents, in-laws, and so on. And the next one is a support test. So generally, you must have provided more than half of your qualifying person's total support during the year for them to meet this test. So quite a lot of information, but this is all on the IRS website, and they do have a booklet or a guide. This is from the 2025 IRS Publication 17 that you can review on your own time. Now we will talk about what documents do you need if you do plan on filing during this tax season. And this is where that information will be generated in the box highlighted in red. The first form that you'll need is known as the W-2 form. It's also called the wage and tax statement. And this is a form that your employer mails to you at the beginning of the year. It is a snapshot of the income earned and taxes withheld from the prior year. So if you have an on-campus job or a federal work-study job, you'll need to check on UCPath. This is where you'll be able to get your W-2 form. And for any off-campus jobs, you'll check in with your employer. Typically by now, folks should have already received their W-2 form, but if you haven't, again, check with your employer. The next type of document that you might need is known as the 1099 form or the information return. And this document is sent to you by an entity that paid you certain types of income throughout the tax year, other than wages, salaries, or tips. It doesn't necessarily mean that you owe taxes on that income, but still needs to be reported to the IRS on your tax return. So there are quite a lot of 1099 forms. 2 examples that I'll talk about is the first one is the 1099 INT. This is known as a savings account interest. So if any of you, for example, have a high yield savings account, you'll notice that you'll get this type of form. The other common example is the 1099 ENC or the freelance income. So if you, for example, maybe you Ubered, you Lyft, you did DoorDash, you might see that you received the 1099 ENC. So now we'll talk about tax and credits, and this is where you'll see the box in red. It's usually on the second page of the form. The 1098-T, or it's also known as a tuition statement, it's issued by colleges or universities that report qualified tuition and related education expenses to you and the IRS. So this can be used by you or your parents if they're going to claim you as a dependent to qualify for certain education credits. And please keep in mind that SBS is the one that emails this information to students. If you need help finding your 1098-T form, please note that it's available on the vendor's website, and that it has been emailed to students that the forms are available. Students will need the following information to access their form. So the Tab Service Company website is www.tsc1098t.com. You'll need to use the UCR site ID, which is 11560. Your username will be your student ID, and your password will be your last four digits of your social security number or previous password if a student has previously logged into the site. If you have questions about the 1098T form, we highly encourage you to visit the SBS website. And if you have specific questions about your form, then please email SBS at sbsofc@ucr.edu. Now we'll talk about where you can file. The first option is to look into the IRS Free File program. So if you or your parents make less than 89K, you can file your federal income taxes for free. I've included the exact link at the bottom of this slide, but when you go to the IRS website, if you want to type in IRS Free File Program, it'll take you directly to here. You can choose to browse all trusted partners or find a trusted partner by answering a few questions, and then you'll be given which ones you would qualify for. So I do want to add that some of the trusted partners do allow you to file also a state tax return for free if you meet certain criteria. And if not, then usually there's a fee to file your state tax. But just note that as long as you make less than 89K, you can file your federal income taxes for free. Another option is to, if you're filing your state tax return, you can go on CalFile, and this is free and it files directly to the Franchise Tax Board. So the benefits is that it's quick. It can take up about 15 to 30 minutes to complete. It has simple step-by-step process. It can save. You're able to save and come back at any time. If you do qualify for a refund, then usually these refunds are quick and possible using direct deposit. It is safe and secure, so you can file directly with the Franchise Tax Board. Instant confirmation assures your return was received. And lastly, it's free. So this is just a screenshot of how it looks like. If you do want to begin CalFile, you'll need to create a MyFTB account. The next option is to look into the VITA program. VITA stands for Volunteer Income Tax Assistance, and this is a free tax preparation program that helps low to moderate income filers. During the tax season, there are free sites across Riverside County, and all sites are staffed by IRS certified volunteers. If you go this route, then you can file your federal and state tax return for free. There is the VITA program. You can go to this site right here on Iowa. But just also keep in mind if you're from a different county, they also have different programs out there or VITA programs out there. But for the purpose of this presentation, we'll focus on Riverside County. So I've included the flyer that has information if you want to go this route. What items are needed for tax preparation. And then if you contact CAPS Riverside or go on their website, you'll also be able to find the different sites where you can go if you want to file your federal and state tax return. The last option is to go in person to a tax professional. So a lot of people who might be filing taxes for the first time might go this route. But just keep in mind that you want to make sure you're choosing someone that has the credentials, right? It's very easy to trust word of mouth, but I just have on here where you can go to, like, if you don't have anyone that is recommended to you, to look up a tax professional near your area and to see do they have the credentials to ensure that they file your return accurately. So after that's said and done, once all the information has been inputted on the tax return, you'll be asked to sign. But before you sign, you want to make sure that you've included all your income, that your filing status is accurate and up to date, and that the names, social security numbers, and bank information are correct, because any small mistakes that are made can delay refunds. That's if you're eligible for one. And so we don't want that to to happen. So always double check before signing your tax return. If you're eligible for a refund, you can check the status of that. So for example, if you are eligible for a federal refund, you can check on the IRS website. If you're eligible also for a state refund, then you'll check on that on the tax franchise board website. In this section, we'll briefly talk about the relationship between financial aid and taxes. All right, so first things first is that when you submit a financial aid application, we will always look at taxes from 2 years prior. So for the current academic year 25-26, we're looking at tax information from 2023. If you are planning to attend UCR or grad school, for example, for the 26-27 academic year, then we're looking at tax information from 2024. So essentially, we're not looking at the tax information from 2025, which is this current tax season. However, I mention all of this because it's very important that the information that you or your parents report to the IRS is accurate because it can affect your financial aid application in the future. So for this current tax season, 2025, this information we won't utilize until the 27-28 academic year. So if you're going to be in school during that time and you know that you will file a financial aid application, that's when we'll be using this current tax season, the 2025. If your tax information or your parents is incorrect, so for example, they filed incorrectly the status, or maybe other income wasn't reported, then what will happen is that the financial aid office will ask that you or your parents to amend the taxes. And we don't want that to happen. I see this all the time, especially when students are selected for verification. So this is a process where we verify the data on the financial aid application. If we see, for example, that parents filed incorrectly, maybe they are, they're married, but they filed head of household, that's going to prevent us from awarding the student, and then we'll ask the parents to amend their taxes. And it just becomes a lengthy process, and we don't want that to happen to students. So again, just make sure that when you're filing your taxes, or even your parents, that the information is correct. In the event that you or your parents do need to amend taxes, it will be this form called the 1040X. And again, if you're not sure whether you or your parents even need to amend taxes, you can use the interactive tax assistance tool that I was mentioning at the beginning. All right, so we are almost done with this presentation. In this section, we will talk about ways that you can protect yourself from fraud. Some tax warning signs to be aware of is one, a big payday. So if it sounds too good to be true, it probably is. Bad tax advice on social media may convince you to lie on tax forms or mislead you about credits you can claim. The second one are demands or threats. So impersonators want you to pay now or else. They threaten arrest or deportation. They don't let you question or appeal the amount of tax you owe. So if you are getting these, then it's a type of fraud. And again, make sure that you are aware of this. And then the last one are website links. Odd or misspelled web links can take you to harmful sites instead of IRS Gov. And this is all from the IRS website, just ways to recognize tax scams and fraud. So in here, we want to make sure that you recognize how the IRS contacts you. So ways that the IRS will contact you is that typically this will be through regular U.S. mail delivered by the U.S. Postal Service. To verify the IRS sent the letter or notice, you can search for it on the website. And some letters are sent from private collection agencies. Other ways that they may contact you might be through email. This is only if you've given permission, with a few exceptions like criminal investigations. It can be through text message, again, if you've given them permission to do so. Phone, they might call to discuss your case, verify information, or set up a meeting. Fax, which not a lot of people do nowadays, but it's still an option. They may send a fax to verify or request employment information, or they can do an in-person visit, but keep in mind that these are rare. Um, what they don't do is that they don't contact you or take payment on social media. So you want to make sure that you get trusted tax information from their official social media accounts. They don't accept gift cards or prepaid debit cards as payment. They don't threaten to call law enforcement or immigration officials. They don't take your citizenship status, driver's license, or business license. They don't leave pre recorded voicemails, and they don't mail tax debt resolution advertisements. So now let's go ahead and recap. So there was a lot of information that was covered in this presentation, but some key takeaways is if you do plan on filing during this tax season, you want to make sure that you gather all of your documents and you organize them as well. Make sure that you file on time. So the deadline to file your taxes is April 15th, 2026. If you do happen to get a refund, we highly encourage you to sign up for direct deposit as it's the fastest and most secure way. If not, then you'll get a check in the mail. And then lastly, we want to make sure that you recognize the ways that the IRS contacts you to protect yourself from fraud. So these are all the resources that were used for this presentation that you can find online. They were from the California Franchise Tax Board and also from the IRS website. With that being said, that is all that we have for you. Thank you so much for sitting through this recording of this presentation. For any general questions, please email us at financialwellness@ucr.edu. You can visit our website at go.ucr.edu/finwell and follow us at UCR Finwell on Instagram. Happy tax season!